Ladies and gentlemen, good day and welcome to Q4 FY23 Results Earnings Conference Call of Dodla Dairy Limited, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Aniruddha Joshi from ICICI Securities. Thank you, and over to you.
Thanks, Yashasri. On behalf of ICICI Securities, we welcome you all to Q4 FY23 and FY23 Results Conference Call of Dodla Dairy Limited. We have with us senior management represented by Mr. Sunil Reddy, Managing Director, Mr. B.V.K. Reddy, CEO. Now I hand over the call to the management for their initial comments on the quarterly performance, and then we will open the floor for question and answer session. Thanks, and over to you, sir.
Thank you, Aniruddha. Thank you very much. Hello, everyone. This is Sunil here. I welcome you all to Dodla Dairy Q4 and Financial Year 23 Earnings Conference Call. I am happy to share that Dodla Dairy reported its highest ever revenue in INR 2,812 crores or 28,120 million, registering a strong growth of 25.3 year-over-year in FY23. The company successfully navigated a lot of sectorial challenges and delivered growth in both domestic and international operations, with a 23.3% year-on-year and a 55.2% year-on-year growth respectively in the financial year 23. Dodla Dairy's Africa business is shaping up well. We continue to reap the benefits of our international presence in the coming years. The company's value-added sales surged by 26% year-on-year to INR 7,408 million or 740 crores, owing to the strong brand recall and wide distribution network, Dodla's VAP network. Dodla's VAP sales contributed 26.8% to the overall revenue in financial year 23. The industry is likely to benefit from a much anticipated flush during the October-November of 2023, but we are already seeing signs of prices compared to last quarter sort of correcting itself. Dodla Dairy is well placed to create value for the stakeholders with its robust business model, state-of-the-art plants, diversified product portfolio, strong balance sheet, which is coupled with adequate cash balance for fueling organic and inorganic opportunities. Now, taking a glance at the financial highlights for the financial year ended March 31st, 23, operating revenue is 2,812 crores or 28,120 million in FY23, as compared to 2,243 crores or 22,434 million in FY22, registering a growth of 25.3% year-on-year. The company's domestic business grew by 23.3% year-on-year to 25,840 million or 2,584 crores, where international business surged by 55.2% year-on-year to 2,277 million or 2,207 crores. EBITDA was at 1,913 million in FY23 as compared to 21,007 million in FY22. Profit after tax at rupees 1,223 million in FY23 was vis-a-vis the 1,328 million in FY22. The PAT margin declined by around 157 bps year-on-year to 4.3 in FY23.
Ladies and gentlemen, we've lost the connection of the management line. Please stay connected while we rejoin them.
Sorry everyone, I think I'll start repeating from the financial highlights. I do not know when the call dropped. I'll start with the financial highlights again. I'll start with the EBITDA part of it. EBITDA was at 1,913 million in FY23 as compared to 2,107 million in FY22. Profit after tax was at 1,223 million or 122.3 crores in FY23 vis-a-vis 1,328 or 132.8 crores in FY22. The PAT margin declined by 157 bps year-over-year to 4.3% in FY23. Lower decline in EBITDA margin at 259 bps year-on-year is due to partially benefiting from very low financial costs and higher other income. EPS for FY23 stood at 20.39 as compared to 22.24 in FY22. Now talking about our operational highlights, average milk procurement during FY23 was at 13.8 lakh liters per day as compared to 12.5 lakh liters per day in FY22, registering 11.1% year-on-year growth. Average milk sales during FY23 were at 10.7 lakh liters per day as compared to 9.3 lakh liters per day in FY22, registering a 14.5% year-on-year growth. Curd sales during FY23 were at 324 metric tons per day as compared to 269 metric tons per day in FY22, increasing by 20% year-on-year. Revenue from value added, including fat and fat-based products, grew to 26% year-on-year to 7,408 million or 740.8 crores in comparing to an FY22 of 587.8 crores or 5878 million. VAT including fat and fat-based contributions stood at 26.8% of the overall dairy revenue during financial year 23 as compared to 26.6% contribution of the overall dairy revenue in FY22. During the financial year periods from 19 to 23, the company's operating revenues, EBITDA and PAT registered a 14%, 10% and 18% CAGR respectively. Dodla Dairy's balance sheet continues to remain strong with a net debt-free status. The management's financial prudence has led the company to maintain high capital efficiency, negligible debt stance resulting from sound working capital management. I would like to extend my gratitude to all our stakeholders for their continual support of Dodla Dairy's vision. We have a strong governance framework. Our business model is an end-to-end socially active. We positively impact over 1 lakh dairy farmers at one end, and on the other end, we ensure health and nutrition to millions of consumers through our milk and value-added products. Our long-term growth engines are with continual focus on ESG practices and a sustained business model with a balanced ecosystem. Before I hand over to BVK for taking you further, I would also like to introduce that we have with us today Mr. Murali Krishna, who is also a financial controller, who will be adding any of the details that we need. Now I hand over to BVK for taking over the next part.
Thank you so much, sir. A very good afternoon all the participants. We have delivered a healthy quarter showing a growth in revenue and other parameters. We are moving towards enhance our footprints and strengthen our pan-India stance. So as on 31st March 2023, we procured milk around 1.2 lakh dairy farmers daily, of which 86% provided with a regular direct payment in bank accounts. Our direct procurement model has further strengthened, wherein we are buying almost all the milk directly from the farmers across more than 7,900 villages as compared, resulting in cost saving and establishment of deep-rooted relationship with them. Our Arga feed operations, wherein we provide high quality feed to the dairy farmers, help us strengthen this relationship with them, and this also ensures both the parties get benefited. Arga feed revenue stood 57 crores in FY23 with EBITDA approximately 5 crores during the same period. In terms of our presence, we continue to have third highest market presence across 9 states in India, supported by 15 processing plants with nearly 22 lakh liters per day capacity. We currently have 118 chilling centers as on 31st March 2023. We have around 580 Dodla retail parlors, strong network, 1,750 milk and milk distributor channels. We have around 2,600 distribution agents network that are all established in many areas of the country. We aim to adopt state-of-art dairy processing technology with a focus on automation, which helps us in reducing operational costs and increased efficiencies. We continue to strive for enhancing our footprints and brand visibility with every passing year, and we are making constant efforts to expand our geographical footprints, distribution network, strengthen brand recognition, and improve our margins to power unmatchable growth in the industry.
Ladies and gentlemen, we've lost the connection of the management line. Please stay connected. go ahead,
Yeah.
sir.
That concludes our update and strategy, which we believe has been positive in most yardsticks. With that being said, we would now like to open the floor for the question answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Avi Mehta from Macquarie. Please go ahead.
Hi, sir. Am I audible?
Yes.
Yes, Avi, thank you.
Yeah, hi, sir. Thanks for this opportunity. I just wanted to get your sense, pick up from your last comment about milk prices. You said about flush season suggesting being a relatively, positive kind of outlook. If you could give us a sense on how you see milk prices trending in the coming year and your thoughts on what could be, what could drive that and the risks around it. That'll help us better understand how should we look at milk. Thank you.
So, Avi, thank you very much for getting on the call. Predominantly, what happens is normally when we look at flush season, when the northeast monsoon sets in, things start to improve, let's say from June from Karnataka side and comes down to October, November for Buffalo side, and there's a whole chain of reaction that comes in the procurement, which is why we generally say that flush period starts from October and therefore prices will correct. But what is happening is I think in few of the states we're beginning to see that uptake of milk production improving already. So I think that will show its impact as we go forward in terms of the current year, so which we are very confident will be on a positive side for us as we go forward. So unlike last year where the deficit was huge, this year we don't foresee that deficit.
Okay, sir. Okay, perfect. And sir, just from, as these milk prices correct, the way I should see this is margins in the value-added portfolio should kind of remain stronger, or how does that kind of behave? Because we have to pass it on. Is there a lag, which is why they'll remain strong? If you could kind of help us understand or appreciate that part.
See, actually, if you look at the reason why compared to our volume, our value seems to be higher when we gave the numbers when we talked about it. It is predominantly because of stagflation that happens in the system. But the number of packs that we sell, we've actually increased the packs because not only the price, but we've also corrected on volume. And that is why you will see the value being higher than the volume growth. I think we will continue to maintain that because currently I think after taking the price increases due to the shortage period, we will not be taking some dramatic price increases as we go forward because we anticipate the milk to come in and the milk prices to soften, and therefore we'll keep the consumer prices stable.
Okay, sir. Okay, perfect. And that kind of helps. That's all from my side, sir. I'll come back in the queue for other questions. Thank you very much.
Thank you, Avi.
Thank you. We have our next question from the line of Amresh Kumar from Geosphere Capital. Please go ahead.
Hello, sir. And thank you so much for the opportunity. But I wanted to ask you on your dividend policy. You are carrying so much cash on the books, almost it can cover for 3 years of CapEx. Hello?
Yes, sir. Go ahead, sir. Go ahead, Amrish.
Yeah, and you are generating almost 150 to 200 crores of cash every year. And it's not that your business is working capital intensive as such. So what about the declared dividend policy from your side?
So actually we are working on it, Amish, because we have to look at it as a two-way thing. We were earlier keeping the reserves of cash, looking at saying we'll get inorganic opportunities for us to go and acquire. And invariably we have a regular capex of 50 to 90 crores if our procurement has to continue and our brand and marketing continue. Keeping that in view, we were holding for a period. But I think we'll surely be coming out with a policy very soon where we'll be declaring what our dividend policy would be.
Okay, and sir, great to know that. And sir, on the data point, can you also give color on your milk procurement from your regular areas, original areas, and also from Maharashtra?
The recent quarter or the recent specifics of the states-wise which we are anticipating as to how the milk procurement is and what we think will go on. BVK will take you through it from. I'll hand it over to BVK, Amrish.
Yeah, Amrish, this is BVK. See, AP now we are procuring roughly about 35% from the AP from Andhra Pradesh. And Karnataka we have roughly about 31% and Tamil Nadu also close to 30%. And PS. Also, we are procuring PS means that includes. Yeah.
Telangana State.
Telangana State is very less. It is only 5%.
Yeah. And Maharashtra is also.
Maharashtra.
Ladies and gentlemen, we have lost the management line again. Please stay connected. We have
Sorry guys for the disconnection. Again, Devika will give through the state-wise split of
procurement. Yeah, see, from Andhra Pradesh, we are procuring 36% our procurement, and Karnataka is 22%, and Tamil Nadu is 29%. And Telangana is 5%, Maharashtra is 9%. The future also, now see, future Maharashtra will go further, and also we are anticipating Karnataka, we are adding some more chilling centers. Karnataka also will go up close to 30%. And Maharashtra also going forward, see, it will go up to 15 to 20%.
Got it, sir. Sir, regarding your earlier comment about inorganic opportunities, so just wanted to understand, if you buy anything, do you also get the procurement network along with it, or how does it happen? Do the milk farmers?
We get procurement network and the thing, but what is happening is the pricing, if it is too high, we don't go for it, because we follow the thing of return of whatever we are investment in the 5-7 year period. Currently, the opportunities that are coming are very highly priced. That's why we're waiting and watching.
Got it, sir. And any plans of infusing more money into your overseas businesses, or they are self-sustaining, sir?
Come again, Amrish, I couldn't hear you.
Your overseas businesses, are you planning to infuse more money into that, or they are self-sustaining for their expansion needs?
Actually generate more cash for us, which is also piling up. And we also have done a small acquisition in Kenya, like we announced earlier, for which we have spent a very small amount of 5 crores for the acquisition, and maybe we'll spend another 5. But Africa invariably generates to us 30-35 crores of cash every year.
Okay. So you are planning to set up something in Kenya because of Uganda-Kenya problems. So how far are we there?
The problem was that earlier, another thing is also to act as an insurance for future, that if anything happens in one, we have another one to back us up.
Got it. So have you reached anywhere on that plan?
I think it has been acquired. I think it will take another 6 months because we have to refurbish it and then start production.
Yeah, already see, we acquired in the month of March. Now we are refurbishing. Maybe from October onwards, we will start production in Kenya.
Good. Okay, sir. Thank you so much, and all the best.
Thank you, Amrish.
Thank you. We have our next question from the line of Aegis Lakani from Unifi Capital. Please go ahead. Mr. Lakani, your line is unmuted. Please ask your question. Since there is no response, we move on to the next question from the line of Sameer Gupta from India Infoline. Please go ahead.
Hi, sir. Thanks for taking my question. First question is that you mentioned that there is a good anticipation of a flush season from October, November. I just wanted to ask you that last year we had several impacts which were seen on the milk production, like a lumpy skin disease. There were late rainfalls in October. There was high inflation in cattle feed and cereal prices. Now, this year, while unseasonal rainfall is anybody's guess, but majority of the rest of the factors are still present. I mean, just today we had an article in Business Standard with 10,000 cases of lumpy skin reported in May. So, just that this flush season being good this year, is it more of a statement of hope at this point, or there are some structural reasons which have changed, which exudes this confidence?
Yeah, I will answer that. As far as South India is concerned, not much of cases have been registered. Earlier, last year it was registered. Now, mostly, where we are operating, Andhra Pradesh, Tamil Nadu, Karnataka and Maharashtra, predominantly this is more cow milk area. Cow milk flush, one round of flush starts only from June onwards. Already it is indicating that already. So, because, from April end and May first week, and recently also couple of showers, that has helped for the cowing. Now, that sign is showing now. So, October, November, mostly we see that buffalo flush, especially in northern India and Madhya Pradesh, UP, Wherever, buffalo population is more, there you see from October, November, that is buffalo flush. But now cow flush first round already started in Maharashtra, Tamil Nadu, and Karnataka. That is showing all these signs.
And also, Samir, I'll add to it, like you're saying, inflation on feed cost and all that has now been taken into consideration in the price increase that has been given as a much higher price increase.
Yes.
Although we are saying we'll anticipate a correction in price, it is not going to go lower than what was in the previous years because the selling price is adjusted accordingly. Our procurement price, whatever it comes down, the farmer will still have the benefit of it because he will still get elevated prices over the previous year. So that takes care of inflation. I think even the COVID uncertainty of non-veterinarians and not able to inseminate is also being sorted out. So it is not a thing of hope, but we are very confidently saying that based on the ground figures that it will do better.
Got it, sir. Just one follow-up there. So this good signs that you have seen in June, this pertains to the cow milk flush, and was it impacted last year and this year it is better, or it was similar to last year? And see, why I'm asking is that basically the milk price inflation is generally linked to this October-November flush. So that's why I'm asking this question.
Ladies and gentlemen, please stay connected while we rejoin the management team.
Sorry, Samir, the following question is where we dropped off, Samir.
No problem. I'll just repeat it again. So I was asking that the cow milk flush in June that you're seeing, was it similar last year, or was it also deeply impacted last year and this year it is better? Secondly, how much of the milk inflation is really related to the cow milk? And my understanding was that it's the October-November flush which basically impacts the milk prices.
Correct.
Because that is the most sensible thing.
Our collection is more than 90% is cow smell. So buffalo flush, as you said, buffalo flush starts from October onwards. Now, first round of cow flush has already started. Because of, couple of shepherds, this month and last month, already cow flush is started in Maharashtra and Tamil Nadu, parts of Karnataka.
So we are seeing that inflation, and Dodla has moved into more cow than buffalo milk procurement as a majority of our procurement.
Got it, sir. And this flush which has started this year, was it a normal flush last year or was it an impacted flush last year, this cow milk?
Last year was a lower impacted. It was impacted last year. Because of lumpy skin and other things, last year was impacted flush. This year it's not impacted and it's improved.
His line is disconnected. So his line is disconnected. We'll move on to the next question from the line of Rajat Sethia from iThought PMS. Please go ahead.
Hi, thanks for the opportunity. Sir, with regards to your milk procurement targets, what are those targets to achieve your sales growth objectives over the next 3 to 4 years? And what's the strategy to increase the milk procurement? If you can help us understand through some, let's say, bottoms-up numbers like how many VLCs you plan to add and how many farmers per VLC or milk per farmer, if you can help us understand these points.
See, basically what we do normally is we target growth of around 15% or a little higher depending on the seasonality that comes in terms of revenue. But we normally comfortably take a standard growth rates of 10 to 12% coming on volume and 15-17% coming on terms of sales. That is what has been historically coming, and we continue to go with that. That is done predominantly with the view of balancing the procurement locations versus the sales locations, because we cannot procure some place where the prices are low but the distance is extraordinarily larger. For example, I cannot procure in, let's say, the northern part of India to move the milk to southern part of India because the freight might eat up on my costing and pricing. So with that in view, we will continue with this 15% growth as a standard growth, plus or minus 5% this way, that way we will continue, but we will average at least 15% growth.
So this growth in procurement comes from adding new farmers or new centers, or how does that happen, sir? If you can And what are your targets in terms of?
I think the depth and the width continues to increase. The depth will be a little lesser compared to the width, because like I said, as we get into more markets, we'll try to procure around those areas, plants surrounding to those areas and do. So that is how we grow. So the depth would, let's say, if it is 30%, width would be 70%.
So what is our current per farmer milk procurement, and where do you think you can grow to?
Our current milk procurement is entirely with the farmer base. Maybe when the seasonality, when we don't have milk, is when we buy from outside. Otherwise, we try to plan entirely on the farmer side. I think this year the growth we are looking will be, as DVK was saying earlier, Maharashtra and Karnataka will be more of our concentration.
Sorry to cut you. My question was, per farmer, how much milk are we procuring right now, and what are our targets?
Yeah, 8 liters. See, average, per farmer of the year. Throughout the year, if you take 8 to 9 liters average.
Okay, and this will remain like that only. So at any center, we need to increase the number of farmers to procure more from that center.
Yes,
correct?
Number of farmers has to increase, and year on year also that is also improving. Earlier, 6 liters, 6 becomes 7. Now it is coming close to 9 liters.
Okay, and how many farmers do we have? And how many farmers do we have at a center level?
120,000 farmers.
No, per center.
Yeah. Per sector, I just don't have the numbers right now with the location wise. If you can just send a mail, or I'll ask our guys to send you the mail. Yeah, location wise farmers. Or 1 minute, I'll just see. I have production with me. I don't have farmers. You want production of farmers?
Sure, sir, no problem. I'll reach out over the email. No problem.
Okay, thanks, sir.
With regards to your branding and marketing spend, what's the strategy here? Because to increase our VAP sales, we really need to be out there and present and grab some mind share. So both our competitors are spending more money than us on our on the advertisement spend. So what's our strategy, and how do you what kind of numbers do you have in mind when it comes to spending money on this aspect?
Please stay connected. We are reconnecting the management team. We have the management line back on call. Please go ahead, sir.
Sorry, guys. Go ahead.
Yeah, so my question was about the branding and marketing spend. I think you were able to hear the question, right?
No, Rajat, not the branding and marketing. You start at the procurement, we'll give you that later.
Okay, okay. So I'll just repeat. So with regards to branding and marketing spend, our spends are as a percentage of sales lower than our top two competitors. So how do you think about it? Because it's really one of the most important aspects of our business, given we are into consumer sales. And to increase value-added products, we really need to be up there and grab some mind share. So how do you think about it?
Actually, this year you will be seeing a lot more of the marketing and ad spend coming into play, Rajat, because the earlier years we were concentrating a lot more on the reach, because it's a fine balance between spending and the reach. Now I think wherever the reach is, where we're confident the reach is higher, we are going to be doing an ad spend. I think this year it will be a far more different than the previous years of our ad spend.
How much did we spend in FY23?
FY23 we would have spent around roughly 9.7 crores.
Okay, and what's the target for this year?
The target will be a little higher than that. Will be around 15 crores, I think, may be the target this year.
Okay, all right. Thank you so much. I'll get back in the queue. Thanks, sir.
Thank you, Rajat.
Thank you. We have a next question from the line of Binoy from Sunidhi Securities and Finance. Please go ahead.
Yeah, thank you for the opportunity. Just a few data points, sir. What was the milk procurement volume for the India business in quarter 4 of FY23 and FY23 as a whole?
The 22 to 23 is what you were asking for, Binoy?
Yes.
So 1 minute, Murli will answer that. Is it for the whole year, and then he'll give you the quarter?
Yeah, hi.
Sure.
For India standalone, for FY22, the 11,73,468 LPD, vis-a-vis in FY23, 12,85,060 LPD. That is 9.5% growth.
Sorry, can you give me in million liters per day?
Yeah, that is 12.85 lakhs per day.
Sorry?
From 11.73.
From 11.73 lakhs to 12.85 lakhs per liters per day. And where AP contributes 36%, Karnataka 22, Tamil Nadu 29, Telangana 5, and Maharashtra 9. That's total to 100%.
Okay, and this was for the FY23, right?
Yes.
Okay, and how about quarter 4 of FY23?
Quarter 4 of FY23 is, say, 12,36,273. More or less, we are at the average of year.
Understood. So, okay, and what was the average milk procurement price for quarter 4 as well as FY23?
FY23, average quarter price for the full year is 37. For the Q4 is 48. 10 paisa.
Sorry, how much is?
Q4 40 rupees 10 paisa. For the full year it is 37 paisa. 37
rupees. And this is only India business, right? Not the consolidated.
Not the consolidated.
Sorry, sir, the line is not very clear. So, is this India business or consolidated?
Consolidated.
No, standalone.
This is standalone.
Standard. Okay, okay. And how is the average selling price for quarter 4 of FY23 as well as FY23 for the standalone?
Again, the same, right? You want to look at standalone or consolidated?
Standalone, yes.
So standalone again, Murli will give you the price.
The standalone Q4 of 23 is 55 rupees 50 paisa, and full year it is 53 rupees.
Sorry, full year is?
Full year is 53 rupees per liter. Okay?
Okay.
And only Q4 of FY23 is 55 rupees 50 paisa.
Understood. Okay. What would be the total cash and equivalents on our balance sheet as on 31st of March at the console level?
Total cash, right? You're saying cash and cash equivalent.
Yes.
It will be around 386 crores.
386 crores. Understood. Okay. So just to get a sense on the milk procurement side of the business, what are the precedents that that we can track in order to understand how will the milk procurement for the upcoming year pan out? Is it the calving season? Just if you could just help me with understanding what can we track as to to get a sense of the upcoming milk procurement.
So, it's basically what happens is, although it is dependent on agriculture, we will talk about rains, we will talk about disease, and we will talk about cattle feed. Dairy industry also will be following a path and trend like most of the agri commodities that you see, that when the prices have gone up, there will be more interest from the farmers, and you will see a uptake of production happening. And if somewhere if there's too much of production and the prices correct lower, maybe the following year it will be a little lower. So my view is, as the profitability increases, the farmers start increasing the production. And it's not only India, it's a global trend. But dairy, unfortunately, has a longer time lag, right? Because it is inseminating, calving, and the animals giving milk takes a cycle of 9 to 10 months. So you can't change things immediately. So that's how the cycle normally follows. Whenever we have a good year, a bad year, it will be followed by a very year.
So essentially, sir, are you saying that, let's say in FY23, when we saw very high procurement price inflation, and therefore it would have resulted in better realization for the farmers, the higher milk procurement volumes would essentially translate into not FY24, but you'd start seeing that in FY25? Is that the way to look at it?
It will start, because FY23, when they see the 9 months period, right? So let's say if insemination, there's good price increases coming in July, August, September, October, November, December. The animals that have been inseminated then will start producing more by next month, by October. That's why they say October, depending on the areas you're in. So it translates to the 9 month lag. It's assuming you're getting the animal delivery.
Understood. And sir, as on date, average for the farmer at the farmer level, what would be the cost of producing, let's say, a liter of milk for the farmer?
That is a brilliant, a question which majority nobody will be able to answer, because the whole problem is statistically you have different ranges of farmers. You have backyard farmer with 1-2 animals who doesn't even do a costing for himself. It is basically the animal can go graze and come, and then whatever milk he gets a revenue. Then you have a small size farmers who have 5-7 animals where they buy concentrate feed and feed. And a few farmers coming out now are coming into being the commercial farmers, where they're doing larger animal farms of the 30-40 animals. So I think we still are, like when BVK was saying earlier that the average yields have increased from that, every year they're increasing. They're moving away from the backyard farmer to the 5-7 animal farmer who's maintaining 5-7 animals. And even for them, predominantly, they don't cost their own labor. They don't give cost to their own ag residue that they give. So it's a very wildly fluctuating price. But I think some rule we look at it is saying that if feed cost is 18 rupees, milk price should be, say, double of that as a milk procurement price kind of a thing. I think currently if there are 20 rupees, it will be 40 rupees. But it's a very, very thumb rule kind of a guesstimate. It's not anything set in stone.
Thank you. Ladies and gentlemen, in order to ensure that management is able to answer queries from all participants, kindly restrict your questions to 2 at a time. You may join back the queue for follow-up questions. We have a next question from the line of Vivek Tulshan from Newmark Capital. Please go ahead.
Yeah, hi. So I heard you mention that the cow flush season has started in the quarter. Would you say that our EBITDA margins, which are in the last quarter at about 4.7%, would you start seeing some improvement in first quarter itself, or do you think it will take for the full year for these numbers to get back to our guided range?
I think you'll see it in the fourth quarter itself, Vivek. I mean, as already 1.5 months has done, it's already we are seeing that. So we are seeing that positive trends. It will definitely show in the first quarter itself.
Understood. And on the sale price, so the realizations are not improving, but we are seeing the purchase prices coming down. Is that the correct understanding?
The purchase prices, the sales prices, as we were telling you earlier, our exit price of March, what you're seeing with the blend of both the product mix, which summer seasons we have a lot more of value add in terms of curd and buttermilk, which is now coming and staying at a higher realization of that 53 or 55 rupees. will continue to maintain, whereas our procurement price will come down.
Just one more question. When I look at our performance compared to some of the peers who've reported numbers, our growth on the volume side is slightly higher. So is it that we are being more aggressive in the market right now versus some of our peers?
Yes, we are being more aggressive in the market right now and trying to go. See, that also is the reason why sometimes when we move aggressively in the market, like I used to keep saying earlier, matching procurement to sale, we might have a differential in profit margins, but we will continue to focus on increasing the market, keeping in mind profitability also, but we will be moving aggressively for marketing also. And international will help a lot more in that aggression.
And is there any specific market that we are being more aggressive in?
No, we are going to be all over. Wherever we are present, trying to improve our depth and keep expanding our width.
Understood. Would it be possible to share the sales mix for the full year statewide?
Sales mix in terms of milk and value-added products, or just the overall sales mix?
The overall sales mix.
I'll just give it to Murli. He will just tell you the overall sales mix state-wise. 1 minute.
Yeah. The overall state mix from AP we have 36%, from Karnataka we have 36%, and Tamil Nadu 17%, and Telangana is 11%. That's totaling to 100%.
Would you have this data for last year as well?
Yeah, we have last year. Last year, AP 38%, vis-a-vis current year of 36%, and Karnataka 34%, vis-a-vis current year of 36%. Tamil Nadu 17%, it's the same in the current year also. Telangana is 11%, it's the same. There is a small change in the AP and Karnataka share.
Got it. Thank you, sir.
Thank you.
Thank you. We have our next question from the line of Vandit Dharamshi from Alpha Invesco. Please go ahead.
Thanks for the opportunity, sir. I just wanted to understand, going ahead, what kind of value-added mix are we targeting, and what kind of impact can that have on our working capital cycle? That's question number one. Question number two is, you have already guided or maybe indicated that for Q1 we are looking at the procurement. So maybe for FY24 or 25, what kind of gross margin improvement can you look at broadly?
I think what I'm saying in terms of value added, like we've been saying that we could keep increasing by that 1-2% has been shown, and that's what we have done in the current year also. Because although in the FY23 we had a little bit of less of fat and we didn't sell ghee, in spite of that our value added had moved forward. So considering the mix, I think we will continue with the 1-2% growth in value added. And bringing it to the working capital margins, we are still very strong that we don't give products which are very long term in the trade and modern trade and such. We normally try to get our money as cash and carry and forward. We have a small portion of the modern trade which might take a few days to come, but it's a very small portion of the overall sale. So no major impact on the working capital. Looking at the forward guidance that we are giving, I can just say that it will be definitely a good improvement over the previous year, in the current year. And 25, it should maintain the same status quo if there's no major happening. So we will be improving and going forward to a better number.
So just a broad idea, so should we look at 150 bits increase in our gross margins, say for FY24?
I think around that should be comfortable.
Got it. Thank you so much, sir.
Thank you. We have our next question from the line of Ramesh from Smart Investment Solutions. Please go ahead.
Thanks for taking my question. So congratulations for your revenue growth of almost 25%. But the gross margin, there is a drop of 3.5%. Can you just guide me through in what factors contributed to it? Is it completely procurement or any other factor which has driven it?
It's completely procurement that normally drives that margin drop which is there. And basically, like I keep explaining earlier, whenever procurement goes up, what happens is by the time we translate it to the sales, it takes a time lag of that 1.5 months, and that's why you'll see the drop in overall realization for the year. But when it comes the other way around, when the procurement price drop, it immediately improves our bottom line. And I think Murli can give you the differential of the exact thing of in terms of procurement differential for the year to how it has happened. 1 minute, I'll just give it to Murli.
Yeah. Hi. So basically, the sales realization of FY22, 49 rupees has increased to 53 rupees. That is 8% increase. Whereas the milk procurement price from 34 rupees increased to 38.7, that resulted into 14%. So there is a gap of 6%, which will be compensated with other savings and all other stuff. The gap basically because of the time it takes 15 days, whatever charge rate overlap will be there. That is the reason.
This 38.7, what you are saying is a procurement raw milk price increase is what you are saying, right?
Consumption price, which is the raw milk price, which that is what we are saying. Even if it corrects smallly, will add to us as a improvement in margin.
In the call, I was listening to the call. You were telling the procurement price average for FY23 was 37 or something.
Yeah.
Is it different as 38.7?
Procurement price versus consumption, we have a slight difference because we have used other things like powder, which is required. Milk procurement price still remains the same, but consumption will be 38%.
I understand. And the second question of mine is on this working capital. You have a negative working capital if I see your balance sheet around some minus 6 crore or something. What steps you have taken to achieve that? Means I heard you will do very less modern trade and those stuff. What kind of revenue you do in modern trade and e-com?
The modern trade and e-com will be very insignificant, less than even, I don't have the exact number, I can give it to you later, but modern trade and e-com will be less than 0.2 or 0.5% at the most. So that is one thing which is there in terms of, our working capital issues which are there. And basically when we look, I can get the specific numbers, Murli will be giving it to you now. And when it comes to the working capital margin, the small 5-6 crore difference invariably can happen even with the stocking of fat if we have or powder that we have, which forms the major portion. Other than that, we don't see major changes in the working capital. This year, you might see a small uptake in the number of days of whatever we say that sales due, because when the government introduced GST on curd and other products, earlier we were billing at the point of sale. Now we are billing at the point of dispatch itself. And because for us it's a timing of 12 at night changing, that added a day to us. So that's why there's a slight uptake there. Otherwise, it's normal.
Okay, thanks. And can I know the liquid milk selling price? I think what Murli had told in the previous answer was overall products. Can he tell me the only liquid milk?
Between milk and value-added product breakup is what you want, right?
Yes.
Yes, 1 minute. Murli will just give you the milk price and the product price. 1 minute.
The milk selling price of milk, we have 51.2. Value-added products is 55.2 per liter. And part products is 450.
Part products, I missed your number.
450, yeah.
450.
400. These are full year averages or only Q4?
These are full year averages.
Can you just let me know for Q4 also?
Okay. Q4, just give me a minute. Okay. So give me some time. Otherwise, we will.
I drop a mail.
Mail ID. So we will revert back to you.
Okay.
So I have a FY22 prices. If you want, I can share it.
Yeah, you can share it.
Yeah. So FY22, milk is 47.1 and value-added products is 50.4 and part products is 374.
Thanks for taking the question.
Thank you. We have our next question from the line of Resha Mehta from Green Edge Wealth Services. Please go ahead.
Yes, hi, thanks. So you did mention that, the milk procurement price for Q4 was around 40 rupees. And if I, combine that with your commentary on the milk price trend, so would it be fair to say now that as we're almost like 1.5 months into, Q1, the milk prices have softened from 40 rupees, your procurement prices have softened?
Yes, ma'am, they have softened.
Right. And also on ground at your village level collection, have you seen that, the consumption of feed, cattle feed especially, since the cost had really risen over the last 18 months, the consumption of cattle feed has, kind of come back with your set of farmers, and that the yield per animal, has improved, maybe what you're gathering from your collection centers?
Yes, ma'am, it's improved. Like I was saying earlier, the backyard farmer of 1 to 2 moving to 5 to 7 will be the bigger trend of cattle feed being consumed, higher yield, because it's not only the feed and the animal number increasing, but also the genetic profile of the breed across the country are becoming for higher yield animals. So that's the overall trend why we see that on an average that for the farmer yield improvements are happening.
Right. So overall, like of late, we had seen a lot of reports in terms of, the economics of dairy farming not working out for a lot of farmers because of, the inflation, etc. But now, with the increased milk procurement prices that these farmers are seeing and the improved, animal health focus over maybe the last 12 months, would you say that, the economics of dairy farming is now again favorable, especially in your markets that, around your village level collection centers?
Yes, it is favorable now, and there are two things. One is the favorability in terms of P&L, because like I was saying, majority of them don't look at it as a proper P&L of capital versus their own worth, but more look at it from a cash flow that they get on every 10 days. They get money for their expense. And as long as they don't lose money on that, they're very happy with the dairy sector as such. That is why I guess dairy becomes as large as all the pulses put together in the Indian agrarian society, because of the primary ability to deliver money to them on every 10-day basis as and when they need. As long as it doesn't burn money for them, they're happy, and I think, yes, they're not burning now.
Right. And on the value-added product side, right, so Q4 saw, unseasonal rains in South as well, right? And so because of that, would you say that 10% volume growth in curd in Q4, is it something that, you are happy with? Was it in line with your expectations or below your expectations? And also, Q1 now, how is that panning out in terms of, value-added products like curd or ice creams, milkshakes, etc.?
Yeah, so basically what happened, the same unseasonal rains from the last quarter continued to, especially in Hyderabad or Tamil Nadu, we had these thunder showers and things like that. There was a slight drop in terms of ice cream and curd, not much of a drop, but a slight drop in ice cream and curd. But I think in the longer term, it is going to be more of a convenience of consumers coming forward to use these products that is driving the sale. So seasonal variations will be there, but things like people not eating ice cream during winter or not using curd during winter, I think we're beginning to see that trend beginning to change, that people are using it throughout the year, and hopefully in the years to come it will improve.
Thank you. We request you to come back in the queue for follow-up questions. We have a next question from the line of Aditya from Securities Investment Management. Please go ahead.
Yeah, hi there. Thanks for the opportunity. So I wanted to understand more about our distribution strategy. So as you deliver milk and value-added products in new geographies, what is motivating customers to switch to Dodla Dairy as opposed to the incumbent milk brand company? Because there would be multiple milk and curd brands in the geographies we target. And since we don't spend much on advertising also, what brings the customer to switch to Dodla's products?
So basically, predominantly the service and quality that actually matter the most, that every day delivering and not having a delay for delivering, and also the quality. It's a lot more of word of mouth, right? If advertisement is a double-edged sword. If advertise too much, the product doesn't actually deliver, it has a negative impact. So for us, actually, we bet very heavily on quality, and we emphasize on trying to improve quality. So quality improvement is across the chain. It is not just saying the word in front, right? Right when we say we automated our plants, to our back-end procurement, refrigeration becoming on time, bacterial counts being lowered. We need not tell it. At the end of the day, it reflects the product that the consumers consume. And case in point is that some locations we will have huge price difference even with the competitors in terms of like the cooperators, and consumers still buy our product because of quality. I would rather say they are a mass premium, which in that way and continue to go for it.
Right. And if you could let us know on a broad basis the margins we make on curd, and is the scope for this margin to improve the increase in curd sales?
14 to 16% depending on the period of the year is what we will be making, and milk would be between the 7-8%.
And is there scope for this margin to improve in the curd segment with increase in sales?
The margin, I think, will keep it around the same the same levels, because otherwise the distortion will be too large. But I think it will remain the same. But volumes we are trying to push more. And also the variants, right? Like buttermilk, lassi, all these variants of the fermented products we are trying to use.
Right. And I wanted to understand about what management thinks in terms of newer value-added products it targets. So, what criteria or factors you look into before getting into newer value-added products? And generally, what kind of revenue or scale, should one reach where the newer value-added products would be able to make margins similar to the curd or any other product?
Basically, when you look at it as an overall market segment, milk followed by paneer, followed by ghee, followed by curd, I think then it is followed by a smaller slice of paneer, and then the host of other products add into the play. So according to the basic consumption segment, what the segment is where we are also at the moment. So the 1-2% addition that we are seeing is that the GDP of the country is continuing to grow, and people are then moving to more of the higher value products. It's the same thing that we are seeing reflecting for us also as we are going forward.
Thank you. We request you to come back in the queue for follow-up questions. We have our next question from the line of Aegis Lakhani from Unifi Capital. Please go ahead.
Yeah, thanks for the opportunity. Mr. Sunil, first question is that, if you look at your standalone cash, X of investments, and the Concall cash, your Concall has about 130 crores of cash and standalone has 30, which means that 100 crores is parked in your Singapore entity. Is that understanding firstly correct?
Yes, that's correct, sir.
Okay. Sir, so could you just tell me that, let's say you want to utilize that capital, do you repatriate it back to India? Is there a cost attached to that? Or do you plan to keep that in Singapore for, some purposes that you may want to do in, the African belt? So could you just call out that what are you doing of that 100 crores cash?
So 100 crores cash actually we had earmarked for a little bit of our Kenya expansion, which we were doing and thought that we will use it there. And basically, Singapore cash can come down in two ways to be more cost effective if India requires the money. One is in the form of dividend. If I'm dividending it out to the shareholders, it doesn't cost us much. It's closely the same. And the second is if I need to do in terms of equity or whatever, the parent can subsidy can buy back is the two options of bringing the cash back to India. At the moment, we're generating enough cash both in India and Singapore, so we're maintaining status quo. So that is what it is. The cash sitting in Singapore, we will look at it if we require it in terms of India requirement, we will be bringing it back through either of the route. If it is for dividend requirement for dividend, or if it is for capital requirement through equity buyback. At the moment, because we don't need it, and thankfully the rates of interest, the returns that we are getting even in Singapore is around 4.5% dollar term. So we're just keeping both of them there, waiting for the opportunity and see how we get them back.
Got it. That makes a lot of sense. And could you just quantify that if you were to do that, what would be the cost implications of bringing back the money here from Singapore?
Basically, if it is a dividend, it will be a pass-through. But if it is, or if it's capital gains in Singapore, here we'll be paying the 10-15% of the difference. But if we actually bring the money into Dodla as a dividend and rest it in Dodla, we will be taxed at Indian tax rate as income, as our income.
Got it. Okay, perfect. And sir, could you just update on the, Orga, expansion? You were increasing capacities here. Is that on stream and does it go live, etc.? Thanks.
Orga was supposed to go on stream maybe in April, but I think it will be delayed by a month and a half. And I think we are looking forward for taking it on stream in another by June or by July next week.
Thank you. Ladies and gentlemen, kindly restrict your question to one at a time. We have our next question from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good afternoon, sir. Thanks a lot for taking my question. So most of them have been answered already. Just wanted to understand this spreads that you were mentioning that, in last quarter, I think the spreads had dropped to around 13 odd rupees. So compared to where we were in the last quarter, what is the drop in procurement prices as we speak?
I think we can look at it as an average of between that 75 paisa to a rupee will be what we anticipate to be the drops in prices that we look at.
Okay, so that is still a while away from a full recovery, right?
Yes, that is what we are saying. It started now. Maybe give it another couple of months, then we'll see even further recovery improvement.
Okay, understood. And secondly, if I look at your curd sales profile, it's also increasing more or less in line with the overall sort of milk growth. So, what is going to be a big driver of your value-added products mix changing favorably going forward?
So basically, we are doing a lot more in terms of Indian sweets, ice cream, paneer, and all the other products and fat. This year, the fat was because we had lack of fat, we did lower fat, but placement in terms of these sales improving. So taking all this whole ratio, I think that is where you will see more of the expansion happening from the value-added products, other than curd.
Thank you. We have our next question from the line of Sameer Gupta from India Infoline. Please go ahead.
Hi, sir. Apologies, my line got cut off. Just one follow-up. Can you just give me the price hikes you have taken in the last 6 months in both milk and value-added products as a percentage?
So we basically show you the difference in terms of what the price is. You want the quarter-wise or you want year-wise?
The quantum of price hike. So let's say right now you mentioned around 50 rupees or 51.2 rupees is the milk selling price. It would be how much, like, let's say in December, or any way you can quantify this in percentage terms?
Yeah. So basically, I think if I look at it as Dodla standalone in terms of a sales realization per liter.
Q1 is a 50.90, Q2 it is a 52.19, Q3 it is a 53.76, Q4 it is a 55.45. So that's the average into 53.02. There is a plus or minus always 5%, less than 5%.
And how would it be for just the milk, liquid milk?
Yeah, liquid.
This is total all put together.
This is all put together.
Correct.
Yeah.
Just wanted for the liquid milk portion.
Right.
Yeah.
Or can you send it to you? Okay. We have the yearly milk and we'll give you the yearly milk and product price, and then we'll get back to the quarter.
Yeah. Year price is basically, it is a 51.18 is the milk, and value added products is 451, and rapid is 55.25.
451 is fat, and 55.25 is other value added.
Other value added.
Which would be largely curd, right?
Yeah, largely curd.
Yeah.
Curd is having a 51.65, and out of total value products of 6521, 5,398 million is only curd.
Got it, sir. Anyways, I can take this offline as well. No issues.
Thank you.
Thank you. We have our next question from the line of Rajat Sethia from iThought PMS. Please go ahead.
Thanks for the opportunity. So what is our replacement capex on an annual basis?
Replacement and I think a regular capex we will be spending around 40 to 50 crores in terms of our regular capex that we do. That is, I think, mostly we modernized all our old plants and all that as going forward. But our major capex comes invariably from our procurement and a little bit on the marketing side, because as we continue to grow, we will be adding more and more procurement at village levels, those equipment that we add in, followed by on the marketing side, call it as freezer placements and getting more of those. So those are the two major areas. I think coming from a plant side, we have revamped most of our major plants. Going forward, we have only very small expense on the plant side. It will be basically procurement and sales. So we would look at between the 50 to 70 as regular capex.
So out of this, how much is expansionary in the sense that it will help you increase your business, or how much is just to maintain the business, I mean, without expecting any growth?
So the procurement and marketing are only for expansion of business is what we keep on investing. The others are because there's built-in capacity now, right? That is why if you look at all the newer plants that they build with larger capacity in view. So taking the next 2 or 3 years, we still have inbuilt capacity. Maybe after the third year when we need more, we will go add more capacity. But we will constantly be adding capacity on the procurement and the sales side.
Sure. So, sir, how much from this 50 crores is the expansionary capacity building CapEx?
The total CapEx we incurred in the FY23 is 134 crores, 1,341 million. Out of that, as Raj told, existing plant expansion, we have done 450 million. Out of that, Kurnool is the highest. And second is procurement is 197, which is on CC, milk and all other stuff. So the totaling to 760 million. And on the new projects, we have spent total 572. Out of that, seed section is 292, and Sri Krishna is 223, and the Kenya project is 56 million.
Sure, sir. And sir, our tax rates are on the lower side. So what is the reason for that?
Which one? The VAT rate?
Tax rates. Income tax.
Tax rates, because this time we got 9 crores of, what do you call that word? Not goodwill, the tax. And also the 25% of the thing. We were earlier in the 30% regime, which has come down to the 25% regime. And we also got a benefit of one of the deferred tax benefit, which was given to us as a credit.
Okay, so our tax rate is 25% now?
Yeah, 25% is where we're from.
Okay, all right. And from the feed plant, where we are putting up some 45 crores, what's the kind of revenue, how much revenue can you generate and what kind of margin do you expect?
So normally, I think in a full capacity of that plant should give us around 200 crores of revenue, and we expect it to give around 10% of EBITDA margins at a full capacity. Okay.
Okay, all right. Thank you so much.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to management for closing comments. Over to you, sir.
So thank you everyone for joining Dodla's Q4 and financial year 23 results announcement. Thank you so much for being patient with all the call drops that happened. Looking forward to seeing you guys again next quarter. Thank you so much.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you. Bye.